Hello again, this is Nate Gable, Farm Business Management Instructor at Northeast Iowa Community College. Today I will be covering the Example 3.2 assignment, going over this solution, hopefully to make it a little more clear on what we're looking for here. But in this assignment 3.2, what we will be doing is just simply, my goal is to have you understand how things that we do affect our net worth, how they affect our balance sheet, okay? Whether we buy a piece of machinery or we sell livestock or whatever it is that we're doing, it has an effect on our net worth. And that's the objective of this assignment. So let's go ahead and take a look. For example, I did the first one for you. Cougar Farms buys a new tractor for $80,000. $60,000 is borrowed to purchase the tractor and $20,000 in cash is used for a down payment. Show the adjustments below. This is basically double entry accounting. It's basically showing you how to record a transaction in accrual accounting. I'm trying to make this as simple as possible. So what I just want you to do is, you know, show us what happens to assets, liabilities, and net worth. Always remember, on a balance sheet, you can divide a balance sheet in half, and that's what we do on our problems. The assets are on the left-hand side, and the liabilities and net worth on the right-hand side. And always remember, what happens on the left-hand side has to equal what happens on the right-hand side. The overall change must be equal. So let's take a look. Assets go up 80,000. Why? We have a new tractor. That's an asset. We now have it. We did not have it before. And so assets goes up 80,000. That would be an adjustment on the left-hand side of our balance sheet, up 80,000. If we look at what the remainder here, we borrowed $60,000 to purchase the tractor. That means liabilities goes up. We now owe someone $60,000. And we paid $20,000 in cash for the down payment. So cash went down 20,000. So when we look at that problem, assets went up 80,000 and down 20,000. That's an overall change of 60,000 on the left-hand side of the balance sheet. And on the right-hand side of the balance sheet, liabilities went up 60,000. That's an overall change, obviously, of 60,000. So, number 2, Cougar Farms sells breeding heifers worth 20,000. The income is retained and put into a savings account. Well, we no longer have the heifers; they're gone. So assets down 20,000. We took the cash, we put it into savings accounts. Now that went up 20,000. Overall change is 0. Number 3, Cougar Farms pays his neighbor 20,000 for custom baling. Well, we had the 2,000 in our checking account or we had it in cash, whatever. Anyway, we had it as an asset. It's no longer there. But the liability goes down 2,000. We owed our neighbor $2,000. That was a current liability. So assets goes down 2,000, liabilities goes down 2,000. Overall change equals then. Left hand side was down, right hand side is down. Net worth does not change. Number 4, Cougar Farms has 40,000 bushels of corn in storage. Corn increases in value 8 cents a bushel. Well, 8 cents a bushel on 40,000 bushels of corn is $3,200. If that corn goes up in value, that 8 cents, that means assets goes up $3,200. Does liabilities get affected? No. So what's the adjustment on the right hand side of the balance sheet then? The left hand side of the balance sheet went up 3,200. So the right hand side of the balance sheet needs to go up 3,200. Where does that take place? In net worth. Corn went up in value, so our net worth went up in value, $3,200. Number 5, Cougar Farms purchases a farm for $500,000. They put $50,000 down and borrow the rest. What that means is when we put $50,000 down, we took money out of checking or savings and we put that money up front towards the purchase of, in this case, a farm. We borrow the remainder of the money, which would be $450,000. So what does it look like to our balance sheet? Assets goes up 500,000. We now have a farm we did not own before. Assets does go down 50,000 because we lost the cash. And liabilities goes up 450,000 because we borrowed that. So the overall change to assets would be up 450,000. Liabilities goes up 450,000. Equal change to both sides of the balance sheet. Cougar Farms has 100 beef cows. Those cows give birth to 90 calves, worth $300 a piece. Oh yeah, we have 90 calves we didn't have before. So assets goes up 27,000. And liabilities doesn't go up. So what's the right hand side adjustment? It's up 27,000. Number 7, not so fun, but depreciation. Cougar Farms depreciates 60,000. As you guys all know, depreciation is when value of our assets goes down. We show it that it goes down 60,000. Assets goes down in value 60,000, so net worth goes down 60,000. So hopefully this made sense to you. If you have any questions or concerns, please feel free to give me a phone call, drop by my office, send me an email, and I will do my very best to explain. Good luck on the assignment 6.4, or excuse me, 3.2. And if you have any questions, please let me know. Good luck.